Good morning, everybody. August the 20th, 2015, and time to get after the markets once again. The rally in treasuries, the selling in equities, the rally in gold, the rally in the euro continued overnight, and the rally in the euro was probably spurred along by another injection from the People's Bank of China into their markets to support the yuan. China had to intervene in their markets to halt the selling that took place overnight in the Asian markets. Collectively, the Asian markets were off 6.13%. Europe's off 2.24%, and the E-mini, when I took the numbers, was off 14.5% from the close. So risk-off investments are in favor, at least for the last 24 hours. Copper is breaking a 15-year low. So there's a lot going on right now in the markets. Turkey has had to intervene with their currency again. Tajikistan devalued its currency 23% overnight. You have to have deep pockets to be in the currency game, and you should, for us, it would be on a day trading basis only while you're awake, because of what goes on in these markets. And what you don't really appreciate or understand in currencies is that you have all the liquidity in the world as long as it trades in this narrow band. When you break out of this narrow band, there is zero liquidity until you enter an area. When all the buying or selling is over, then you'll have liquidity in a very narrow band. And that's what makes currencies very, very risky to trade, because you may think you have a stop here that protects you, but you don't. What happens when you trade currencies is that you have to have your stop inside these bands, and that necessarily by definition will give you a pretty tight stop, which isn't all bad, but it's a tough market to play. So what can happen in the overnight session is the markets go up until there are no more buyers, or they go down until there are no more sellers, and this represents probably pretty stout resistance. So 11 to 15 will be sell 1, 19 to 23 will be sell 2. The side to trade from is the long side. 1 to 5 will be our first buy zone based on this volume right here, based on the buck. And we have this L period rotation down and this high over here, so then 25 to 29 will be buy 2. News today, jobless claims 270. That's kind of the default figure. It will cause a market reaction because it's the first piece of news out. The big number I think today is going to be Philly Fed and existing home sales. Philly Fed is forecast at 7.5. Some people are carrying it just under 7. Econo Day is carrying it at 7.5. That number could come in lower than forecast if the recent history in these numbers is a guide. Existing home sales, 5.4 million. That number could come in higher than forecast. Most housing numbers do come in higher than forecast, especially the sentiment numbers, but it's not 100% guaranteed. Nothing is in this game. LEI plus 0.2. Again, no one pays any attention to LEI. And natural gas inventories plus 60. BCF. So the news focus is 1, and these both will come out at the same time, double whammy. And I think these two, the second set of news that comes in at 10 Eastern, will be what the market pays attention to. Everything is pointing to the long side of the market. The issue is, can we get through 12? So we'd like to buy into weakness to see if we can take out the high at 12, and if we can't, we can trade from the short side. Okay, looking at the 30-year, and I want to just again drag these charts over. The knob spread, I mean, there will be a bottom and there will be a top, and these are $1,000 trades. So you see this bottom came at 157. Look at the high on this chart. Looks like 159.24 to 28. That's 2 3/4 points in 24 hours or less. I mean, this is a huge market. So what you're looking for directionally is this high or low, or in this case, if it's going to sell a lower high over here, something like that. But it is a great, it's the best indicator, it's the best study to follow that I know of for the long term, I mean the directional move of the market. It's also in the profile. I mean, it's there, but you know, so many people come in and they freak out in the profile. God, letters as opposed to lines? Are you crazy? There's more information in the profile than there is in a line chart, like the skewing of the distribution, the shape of the distribution, etc. But a lot of people, that's a little bit intimidating for them. So again, we find ourselves in the same situation. Is 26 the high? And there's a chance it is. The market traded up from 58.26. It traded up a full point in the overnight market. And anybody that had to buy and wanted to buy has probably bought. So selling failure to take out 27 in the buck is a trade. On the buy side, we have the breakout from 59.12. We have the London high at 13, so 9 to 13 buy 1. And buy 2, because of the volatility in this beast, will be 29 to 01. We'll give it some room. On the sell side, 60.07 to 60.11. Those that were betting on a rate increase in September, that expectation has come down quite a bit, and those people are scrambling to cover their shorts. Okay, gold is a risk-off investment. It was higher last night. Why is it higher? Well, the Fed can't raise interest rates because the economy is extremely fragile. That means that if there are revenue shortfalls, if our economy happens to go into a contraction, that the revenues will be down, the Fed will be printing more money, and who in the hell wants to be in the stock market anymore? So it's just natural. It's human nature. Remember yesterday we were talking about the 32 area, and then we were talking about 43 to 47, and we almost made our 43, and we have this low volume area right here with a low volume number at 41 that has contained the market. So if we stay below 43, this market can actually correct. The issue is how far. Well, we have the overnight low at 32. We have the breakout from yesterday's high at 34. So 33, 35 will be buy 1. And we have the last rotate down yesterday in J period and L period at 27. So we'll make 27, 29 by 2. And on the sell side, 40 to 42. Got a low volume number at 45, 45 to 47. Sell 2. Sell 2. So that's it for gold. If you want to sleep well at night, you're long crude, you're long gold, you're long treasuries, and you're short equities. And that's not a recipe for investment success. It just reflects the nature of those markets. And if anything bad happens in the world, it usually takes gold, the dollar, and treasuries higher. Crude oil, war, big spikes to the upside, explosive spikes. It does sell and it does come down quickly, but when the drumbeat of war gets louder, it explodes the upside, and then you're short equities because the dangers to the downside in equities, especially these days. Looking at the euro, China had to pump more money into their system last night. Anytime China supports its currency, the euro is going to get stronger. They don't like that. So the best resistance is in this 112 area right here. So sell 1, 112, sell 2, 25. On the buy side, we had the breakout from 38. So this 50 area plus or minus buy 1, 25, buy 2. Okay, crude oil. Today is expiration for the September contract. You have to be in October. And if you have whatever your trading chart is, be it the dome or not, you go to trading up here on the left side. You go to profiles. And down here where it says contract expiration, you select the October contract, so you hit that down pointer right there to open up the contracts. Once you've selected, left click on it, you selected Victor 15, then you hit the select button, and that should give you the contract. So hopefully you've made the switch to the October contract, and if you haven't done it, or if you need to know how to do that again, let me know and we'll take care of you. But that's how it's done. Okay, we've been talking about, since we went through 42.50, that we were headed for 40 bucks. 40.50 held, and it won't happen in one swell foop, but we're going to go get stops below 40. We're that close. So 40.50 is 40 1/4 is buy 1. Stops below 40, 39.70, 40 is buy 2. I really don't like the long side of the market. On the sell side, 41, 41 1/4, sell 1. 41.50, 41.75, sell 2. Okay, Rich Genders probably will not be back until September. He had hoped to be able to do the room while on vacation, but he doesn't have the computer horsepower to do that. So he's basically taken the month of August off. Why do people take the month of August off? Because it's very difficult trading. It's a great learning environment. It's not an environment where most people think in terms of making a lot of money. But it saves a lot of frustration. And it saves a lot of quiet days where you just really isn't anything going on. Crude and gold are two contracts where that can be that can be the exception to that. Okay, the E-mini. There's the low at 46.47. So we've got support in the 55 area. That's buy 1, 55 plus or minus. 50 is buy 2. Got pretty good support over at 47. Looks like we may have rejected prices below 49, so that's the 50 for buy 2. On the sell side, we have the spill from 65. We got these single prints right here. We got that. So 62, 64, sell 1. Last rotate up in London was 70, so 69, 71, sell 2. Option expiration, the play yesterday in calls was 20.90. The day before, it was 10 points higher. So the play yesterday was 20.90. The play in puts was 20.50. And so we're going to have some support at 50 as people take profits on those puts. So right now, looking at this mathematically, at close at 70, come tomorrow is what the math says. And again, we'll have to see how the options played today. But pretty good resistance in this 60-62 area. We got these single prints, so we can get a short off above 60 to retest the lows. I think that would be a reasonable or a fair trade. The trade off the bat is to get short. See if we can take out the overnight session lows. 47.50 is best support. And the put play yesterday was 20.50s. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that right now. I'll be back with you as soon as possible.